Welcome back, Turnkey family. We're your hosts, the Turnkey Brothers, brought to you by Boise Turnkey. And today on episode 8, we've got an amazing guest today. His name is Leif Karlberg, and he is a Rockstar lender that we've worked with in the past, and we're excited to have him on here today for you guys. He talks about a lot of great things on today's episode, and one of the things I'd like to touch on is his acronym CIA. Stay tuned to what he has to say on that, and doing the next right thing.
Hey guys, Leif takes us through A to Z what it looks like to get your first loan if you're curious what that process looks like. And stay tuned because we get real motivational right at the end. Hey guys, what's up? We got Leif with us today. He's a current lender, ex-basketball player, ex-basketball coach, went from the coaching world and now he's in the lending world, but he hasn't stopped coaching. And what up, Leif? You can go on with that.
No, I like it. I like that tagline. It's good to be here. Appreciate you guys having me on.
Yeah, thanks for coming. Yeah, so get the community up to speed a little bit. Tell them a little bit more about yourself and how you got to this place in your life.
Yeah. So like Matt mentioned, spent the bulk of my life really involved in the game of basketball. Took me to the college level where I played for 4 years, spent a little bit of time traveling the world, played in the Middle East, and then played out in Australia, and then came back. I was 24 and got offered a coaching job at the school that I played at, and just always knew that I wanted to coach, and so just took the bull by the horns and really enjoyed just the college basketball atmosphere from the coaching side, just connecting with players, connecting with people from just all different backgrounds. It was really cool, really fun. Spent 7 years coaching at the college level, and make a long story short, my wife and I started having a young family, and our schedule was not really coinciding with where the basketball world was at the time for us, and just needed something a little different financially, and so we just kind of scrapped everything and went to square one, and I just started calling people that I knew, just saying like, hey, I'm looking at getting out of coaching. You got any ideas for me? And so there was actually a player that I coached. His dad lives down here in Boise, and I didn't know what he did. I just knew he was super connected. And so I knew we wanted to move down to this area. We were up in North Idaho at the time. My wife's got family down here. And so I just gave him a call, and I just said, hey, this is what I'm thinking. Like, you got any ideas? Do you know anyone that's hiring? And long story short, he was in lending. He's the head of business development for a mortgage company. And he's like, yeah, I got a great idea for you. I think you'd make a good loan officer. So I'd never thought about mortgage a day in my life. Hadn't even bought a house at the time. And so, for me, it was literally a whole new world. But as he boiled down kind of just the job itself, the intangibles that it takes to work with people, and just the opportunity out there in the mortgage space, it became a no-brainer, and that was actually about 1.5 years ago. So about a year and a half in, and loving it, and been learning a ton, and just enjoying getting to work with people. So,
nice. Yeah, the analogy goes, jump out of an airplane and build your parachute on the way down. You're like the epitome of that.
Yeah.
You're just like, yep. Done with coaching. Let's figure it out on the way down.
Yeah.
That's a huge risk for people when we talk about moving into a new space or doing something new.
Yeah.
How did you and your family combat that unknown?
Yeah. No, that's a really great question. I think my faith is what drives me. I firmly believe that God is in control, and I'm going to make decisions as if it's up to me, but as I make those decisions, I just trust that he's going to work things out along the way according to his plan. So, it was never if I was going to be okay or if my family was going to be okay. I was just kind of interested to see how that was going to play itself out. But I remember I had a Zoom call with at the first mortgage company I was at, one of the high producers. I just wanted to pick his brain. I was like a month in. I was like, hey, teach me what worked for you. What did you wish you knew when you first got in? And he was kind of hearing my story, and he was like, let me get this straight. You left a salary job, with a wife and 2 young kids to get into a fully commissioned job in a place that you've never lived before, in an industry that's really network heavy. And I was like, yeah, you're making me sound kind of dumb right now. But he was like, hey, more power to you, man. Like that's risky, kind of like you said. But I just think it's, just a great case study in the fact that, the people that work hard and want to really connect with people and provide solutions, provide services, and do it with like a genuine servant's heart, I think,
Yeah.
you can stand out.
Yeah.
So
No, that's great. I feel like I can and I can't are the same side of each coin. It's just a matter of mindset and how you perceive it.
yeah,
And you definitely have that I can attitude.
yeah,
That's awesome.
yeah. No, it's been a fun
Yeah.
journey. So
Okay. So now you're in lending. Tell us a little bit more about lending. So we have a lot of listeners out there who are probably first-time home buyers, first-time investors, just getting into it. They don't know what a mortgage is. They don't know how to lend. What are interest rates? What are buy downs? I know there's so many questions that I just asked you, but
yeah.
if you could just get like the low-hanging fruit to just open the book on what lending is to our listeners, can you walk us through that?
Yeah, yeah, and I think you're right. It's really easy to get super deep and get into the weeds really
Yeah.
fast and go through every little scenario. And quite frankly, I just got an email this morning about Fannie Mae and Freddie Mac and some different regulations that are changing. So it's always evolving. It's changing on a daily basis. Obviously, COVID, when that hit, just kind of threw everything everywhere for a loop. And so we're still, it's always evolving. But I think the main things the kind of the core tenets of what does it take to qualify are just really simple concepts for people to just kind of have in their back pocket when they choose to go down that route. And
Yeah.
so, we look at a few main things. Kind of the acronym that I use is CIA, and with A, there's kind of a /L, but the C stands for credit. So you obviously look at your credit score. That plays a big role in what type of financing or pricing you qualify for. And then the I stands for income. Income's a huge piece of qualifying. It's hard to convince someone to give you a lot of money if you're not making money, or if that money you're making isn't, somewhat secure. And so we look at your income, and then the A stands for assets. Basically, do you have the money to bring in to close? And then with assets, that L would be liabilities. So what's your monthly debt obligations compared to the income that you're bringing in? And so we'll look at like a debt to income ratio. You guys deal a lot in the investment space, and so we'll look at just what it would take in terms of cash flow or income that they're going to get on a subject property to make sure it fits within certain debt to income ratios. And yeah, there's a lot of different ways I could go down that route, but I think the overwhelming principle that I've found with, you mentioned first time home buyers, is and I was this way too before I got into
Sure.
lending, is I thought it would have taken way more to qualify than it actually does. And there are routes and ways that you can get really creative that they've set in place to help people, just get their foot in the door and kind of get their skin in the game.
Yeah, I hear that time and time again. People are like, "Oh my gosh, I qualified for way more house than I thought I would have."
Yeah. Yeah, and I think that's where like I can come in as an advisor, and I really enjoy having these conversations with specifically first-time home buyers. We're saying like, "Hey, I quite frankly couldn't care less what you qualify for. I mean, there's a base level where I need to, but like I want to know what you're comfortable with. What
Yeah.
fits your lifestyle, what fits your budget. Because the worst thing you can be is house poor, right? Like
Oh, yeah.
to get into a
Mhm.
place and
Mhm.
live to make your mortgage, like that's no way to live. So
Yeah.
Yeah, that's a great place to get started. I love that acronym, CIA, credit, income, assets. For a lot of people who are either listening to podcasts, reading books, don't know where to get started, there's so much going on. I can't like identify one place that I can work at, and they just get caught up in analysis paralysis.
yeah,
Well, you just gave them the playbook on how to start. I mean, I know you're a coach, but hey, if you want to get started in investing or buying your home today, work on CIA, work on your credit, work on fixing your income, work on um, maintaining your assets and maybe lowering your liabilities.
yep.
Yeah, that's awesome.
Have you ever worked with somebody on like looked at their credit and like, hey, you're not quite where we need you to be, and then given them step by step game plans on how to increase their credit or work on their debt to income ratio, like what to crack away at first?
Yeah, absolutely. Yeah, there's, I mean, a bunch of scenarios I could give you, but that's I would say one of the more rewarding scenarios that I see, in my world, is to be able to see someone come in and, maybe their income's great, but they just don't know how to
Manage money.
manage money. Yeah, their credit report, you look at it and it kind of takes you back a little bit, but there are certain steps that they could take that really aren't that difficult. It just takes focus, right, and a plan.
Hmm.
If they put that into play, then all of a sudden their score is going to jump to where it's not just qualifying, but going to give them way better pricing too, because it's less risk on the behalf of the lender. But there's one lady that one of the first loans I did, she came in and was getting under contract on a house, or wanted to, and her debt to income was just above where it needed to be. But she had this really big car payment. But there wasn't a ton of payments left, maybe a couple years worth. What we were able to do was to pay off that car loan at closing, kind of roll that into the loan. That means we could offset that fat monthly payment for her that was keeping her from qualifying. And then once she was under that debt to income ratio, she was paying that car off through closing. We're there. And so for her, like, she didn't even know that was an option. It got her out of a big car payment and got her into a house. So
Yeah, so there's
So
two things I
creative.
want to touch on with that. One, you mentioned paying it off at closing, which
Yep.
I know can be really important because if somebody just goes out and pays off their car payment, it could actually negatively affect their ability to close, right?
yeah, it definitely muddies the water a bit. It any action you take in the lending world, you'll find out it creates a paper trail, and we need to document it, and not a lot of people understand that, we got hundreds of thousands of dollars on the line. Like,
Yeah,
Yeah.
the
exactly.
lender's going to want to know, what's going on,
Yeah.
Right.
in every aspect. And so, yeah, if we structure a loan a certain way, typically we like to just take care of it, at the closing table with title and escrow, and that's usually the most seamless route.
Right. And the second point was the asset that you are being able to coach someone. So like right now in the market, a lot of people are fearful and they're just in a holding pattern. Well, they could be reaching out to you
Yeah.
and getting an idea of what they could afford
Yeah.
if they were more comfortable with a different interest rate.
Right.
Unfortunately, with what we're hearing, it's just a lot of negativity. Like rates are too high, even though we're in a lull right now.
Right.
This might be the last best time to buy.
Yep.
But there's really a great opportunity to be coached by an advisor like you
Yeah.
so they're set up when they're more comfortable to enter the market, and then they don't have to come to you then and it's all of a sudden like, hey, like I'd love to lend to you, but unfortunately we can't because of X, Y, and Z, which they could have already had, in place.
Right. Yeah, no, I think it's like anything, if you legitimately want to achieve a goal, there needs to be a plan in place for that goal. And some people, yeah, they might come in and apply and realize, oh, I'm approved right away, and that's great if that
Right.
happens. But for a lot of people, like you're saying, like, man, you can't get time back. And if you would have come in 4 months ago and at least gotten an idea of what it would take and got a plan in place, then yeah, then you're ready to strike when the opportunity presents itself. And so that's where, I think that it can never be too early to at least get the conversation started. If
Right.
you think at some point in your life, yeah, like I want to buy a house or I want to invest.
Yeah, I've met so many people who want to. They're like, "Oh man, I want to buy a house. I'm going to one of these days, but my credit sucks." Or, I want to buy a home, but I'm renting right now, and I'm just gonna try to save up for some money or whatever. But the biggest thing is that credit score. Now, you were mentioning that you can help fix or adjust them a little bit. But what are some
Quick tips.
quick tips? Yes, to for people today, like who can start working on their credit, because man, some people they're just like right on the cusp, like they just need a little bit, but they don't know how.
Yeah. Yeah, I would say one thing is, there's so many moving parts when it comes to a credit score, and so it can be overwhelming to people that just see that
Yeah.
their score sucks or
Right.
whatever.
Yeah.
And then they don't do anything about it because like, man, that sucks. Oh well.
Kind of
set it down.
paralyzes them a little bit.
It
right?
does, yeah.
And so I think like just looking for tangible things that you can do. One thing is to keep your credit balances low. And so like if you might have 10,000 credit limit on a certain credit card. And having a credit card isn't a bad thing, like in terms of getting your score up. It's just how do you utilize that? So keeping that credit balance around like that 30% range, like that.
Usage,
Yeah, that's going to help your score. That's going to show strength that you know how to use that credit line, as opposed to someone who's near maxing out every line of credit that they have. So that's one thing that I'd say like people can
Okay.
pretty tangibly just keep in mind. Obviously, limit your late payments. Like I would say, have no late payments. Like
Yeah.
if you're gonna commit to buying something, like
Sure.
be able to at least pay the minimum payment on it. Don't get any derogatories. So
Right.
Yeah.
Yeah. And then your credit limit isn't a bad thing. So if it gets increased from that 10,000 to 25,000, it's just a bank showing that they have trust in you to have that limit,
Right.
and you don't have to use that. It just sits there, but
Correct.
it doesn't look it doesn't hurt you. It actually probably helps, I would imagine.
Sure. Yeah.
Would that help you? Like if I went today, I've got a credit card worth that has a limit of 10,000, and I go to the bank and say, hey, I want to up my credit limit on this card. And they sure, we'll take up to 25,000. Will that help me show that I have a lower usage of a higher total credit?
Yeah, I mean, in theory, I would assume it would. I'd honestly probably want to see how it played out, just as a case study. You know, in my mind, in my line of thinking, that would add to the strength of your profile. But yeah, and the other thing too that I want to mention to people is like my job isn't a credit repair specialist. There are people who work in that space that like I lean on heavily when I get a credit report that, you know, I can see obviously the areas that need some fixing, but in terms of, you know, going and fighting certain things on your credit report or getting stuff taken off, like there are people that specialize in that world, and I'm like, I think a strength of mine, if I can be so bold, is to like I know what I don't know, and so when someone comes to me with something, like I have no shame in saying like, hey, let me go find out, or you should go talk to this person, because you know there are experts in each of those fields. So
yeah, that's fascinating.
That's very valuable in this line of work though, because a lot of us just want to give the answer to get a payday.
Right.
I shouldn't say a lot of us. A lot of agents and a lot of commission-based individuals just give an answer to get a payday, but that's not always how we serve our customers and our clients the best.
Sure. Yeah. No, I think you're spot on there. Like if it's about truly serving other people, which I have a deep conviction of, it's you know, does it serve them for me to tell them the answer they want to hear in the moment and make them feel good, right? Or does it serve them for me to tell them, hey, I don't know, let me go find out, or maybe to give them the hard news, right? So there's a lot of carryover from that coaching world in that concept itself that I think has just helped me kind of remain at, you know, a low pressure, you know, place to just say like, I don't need to know everything on the spot,
right?
But I can find out, and I'll find out as fast as I can.
Yeah.
So,
And that's how we get smarter and how we educate ourselves. It's okay to fail. It's okay to not know something.
Yeah.
You know, once we've identified that that's all right, you know, then we can start the growing process.
Yeah.
And together. And now you learn more because of it, because they asked a really good question.
Sure.
You know, that we didn't know before.
Yep.
Yeah.
Yeah. No, it's good.
So if somebody's in the right spot, they're like, you know what, maybe I'm not ready today, but I at least want to, you know, hear what I don't know, and get a game plan going. Or if they are ready to jump into it, but they're like, I don't know where to shop or where to start. Like, how would you go about shopping a lender? Or what would you look for in a lender?
Yeah, so if I was looking to buy a house, I mean, I personally would shop multiple lenders. I would just see who has a good fit for me personality wise. I would see who I feel like I can trust. Because I think, like you're saying, in any space, in any you know, career field, there's people that are going to look out for their interest over the interest of the people they should be serving. And so, yeah, I think your intuition can go a long way when you just talk to people and realize like, does this person seem to be concerned about, you know, me and my scenario, and just are they on top of me? Communication's huge. You know, you hear horror stories in the real estate world of you know, lenders that don't communicate, agents that aren't doing their due diligence to look out for the best interest of their clients. You know, I remember when I first got into lending, I called a real estate agent that I knew actually from the college basketball coaching world. Shout out Nelly Sells in Tacoma, Washington. But I asked him, I just said, hey, as a new LO, what's one piece of advice that you'd give me just in my relationships with working with agents and clients? And he said, bad news doesn't just get better. So if you have bad news, like communicate it. Like if you know it on Friday, but you wait till Monday to tell me, all we've done is lost 3 days in which we could find a solution. And so just be upfront. Like we all want the same thing. We're all on the same team. You know, communication in that sense, I think is huge. And then he also followed that up with, if you have an issue, it's great if you could come with a possible solution too, you know? And
Totally.
so, but to get back to your question, I just think like someone who communicates well, who shows care for you, you know, can't be overstated. But then let's not beat around the bush. Like pricing's a big deal, right?
Mhm.
Like you can love someone, and love working with someone, but it helps to have really competitive pricing, good products that are going to put you in the most strategic place financially, because at the end of the day, that's what you're going to be carrying with, after that transaction's complete. So
Well, let's move into products a little bit since you're talking about products. I know that there's different types of loans you can get: conventional, VA, FHA. I think there's some Idaho specific ones too. Can you maybe go through just a little bit of those products that you guys have to offer?
yeah, so on the conforming front, you have your conventional loans, your 30-year fix, Fannie, Freddie. Those are kind of your cookie cutter, pretty simple transactions, like people that fit into a pretty conforming box. It's a
Okay.
conforming loan. Your FHA and your VA are government loans, and so they're actually backed by the government. VA obviously for individuals like yourselves who have served in our armed forces, and there's some amazing benefits that come with the VA loan. It's honestly my favorite loan to deal with, for a variety of reasons. And then your FHA, it's for your kind of your common citizen. There's some looser guidelines when it comes to like credit score. There's some pros and cons. It's a loan where you have mortgage insurance that you're paying throughout the life of the loan, and that can get expensive. Typically, government pricing is a little bit better than your conforming conventional pricing, and so they might see an FHA rate and see, oh, that's like significantly lower in my interest rate, but you look at what they're paying in mortgage insurance, and there's kind of a line that you gotta see if that's gonna actually be worth their money,
Right.
if they could go conventional.
Sure.
And so, but yeah, there's a variety of different qualification standards that go into the VA, the FHA, conventional. All in all, they have different loan to value maxes that it would take to qualify, whether you're a first time home buyer, whether you're looking for an investment property, second home, stuff like that.
Yeah.
So,
And I want to hit on something to squash, because a lot of people think FHA is first time home buyer, but FHA is just the Federal Housing Association.
Yep.
So it doesn't have to be your first home
Nope.
to qualify for that. So I just wanted to take a quick bit to squash that.
Yeah.
yeah, no, that's a great point. A lot of times with your FHA, that's going to be for people whose credit score is in the 600s, like where you'd be getting hit if you go for a conventional loan with like a 680 credit score. Like you're going to get hit with some price adjustments.
Mhm.
You're not going to see those significant price adjustments when you go FHA, and so typically it's a case by case basis, but typically by looking at a borrower, I don't even bring up all the ins and outs of those loans when they apply. I just let them know there's a couple different routes we can go, and then once we build out their CIA, their credit score, what their debt to income ratio is looking like, and where we might land. That's where I can determine, this is a good FHA borrower.
Right.
And typically that's a loan where you say, hey, once you get in a position where you can, refinance into a conventional loan, get rid of that mortgage insurance, that's going to be a strategic way to go to save a couple $100 a month. So.
Sure.
Yeah.
And this person may be wanting to buy an investment property. It might not be for themselves.
Correct.
So a VA or FHA might not be the right option in that case, correct?
Or
Correct.
an option at all.
Yep.
Right.
Yeah, and so that's where it helps just having an advisor to walk you through kind of what each loan entails. And
Right.
you brought up Idaho housing. I think Idaho housing is a great option for a lot of buyers that we kind of mentioned earlier. Think like, man, there's no way I could qualify for a home. With Idaho housing, they have some down payment assistance programs that have helped a lot of my buyers get into houses. Even just last month, had a couple buyers utilize a down payment assistance program. They came in with 0.5%, and they were able to borrow the rest. And,
Wow.
yeah, and so that's where $1,500 could get you into a home.
Yeah.
And again, like we're not trying to slide you in by the skin of your teeth and put you
Right.
in a position where you're not comfortable. But for a lot of people, especially as we're seeing prices soften,
Mhm.
that down payment assistance can at least get their skin in the game to where now they can build wealth,
Yeah.
through real estate and put their money to work for them.
That's awesome. I want to touch on something because a lot of the gurus or a lot of the bigger podcasts out there are always talking about these different types of loans or how powerful a VA loan is. But I want to touch on how powerful a lender is, because
Mhm.
I don't care where you are in this country, what state you're in. Every state's going to have some kind of different assistance program or something different that you don't just know about, you know. But when you go to a lender, a Rockstar lender like yourself, and you ask Life, "Hey, what are some of my options?" He's going to tell you, "Hey, your situation, your CIA, like you kind of fit this mold. We can get you into the Idaho housing program, and we can get a win-win for everybody here."
Yeah.
Yeah, and I think there's other things too that it's it's good to know that these options are out there. It's like having a parent cosign on a loan for you, like basically
Yeah.
saying, "Hey, my dad, he's not going to live in the house, but I'm using his credit profile, I'm using his income. Now we'll take the lowest credit score out of the two of you, but if you can use his income towards your debt to income ratio, so your dad makes, some good money and he's willing to help, he doesn't even have to spend a dime on the property. If you have the money for the down payment, you're kind of using him to back you, and the lender can say, "Yeah, I'll use his profile in qualifying you." Boom. That's how a lot of young individuals are getting into houses now.
Yeah.
And so cosigner is a great option. Gift funds if you have a family member that is willing to contribute in that way. There's a lot of different routes you can go that just make it, I guess, tangible.
Yeah.
So
So I want to like triple tap this and just say like there's a definite difference between a rock star and a budget. Like you can go on and get a budget loan, that one of those internet loans today, and they'll boast the lowest prices anywhere. But that being said, like you could get qualified, sit in your loan, and think that you're getting the best deal, but you'll save hundreds, if not thousands, by going to a rock star that doesn't stop working. And that's one reason why I choose you as my preferred lender, is because I've seen you not stop working. You don't have a guaranteed payday, but you will make a good situation better, which is something that we always learn in our SEER course, our survival course. Even if you're fed for the night, you have water for the night, and you have shelter for the night, you can always make it better. You can make it warmer, or you can waterproof it, or you can get more food, or you can stack more water. Because what happens if you need to be in that situation longer than a night?
right.
Um, anyways, making a good situation better, and that's one thing that a rock star will do, is they won't stop working for you. Where a budget lender, they already have their guaranteed payday.
Right.
What incentive do they have, right?
Yeah, no, and I mean, I'm not here to call anybody out. I think like the proof is in the pudding,
Mhm.
and when you go get a burger at McDonald's and you get a burger at Red Robin, like they're both burgers, and it's like there's a difference there though, right? And
Yeah.
and you might pay a little bit more for one. The cool thing about being a broker, and we'll get into this here in a second, but the opportunity that I have now to provide great service at very low cost, low margins in terms of how we operate as a mortgage broker, like to me, kind of gives me the best of both worlds. So that like, yeah, I don't have to sacrifice the customer service aspect. I can still work as hard as possible for my clients, but also do it, knowing full well that they're getting the best pricing out there. So.
Okay, so let's
Yeah.
go into that. What's the difference between like a broker and a retail mortgage lender?
Yeah, so I actually started out in the retail space. I worked at a retail mortgage bank, and honestly had a great experience. They were great people. We provided great service. The reality is with a retail lender, yeah, the infrastructure that you're working under, there's a lot of hands, I guess, that get a piece of that pie when you offer products, and so you kind of have your base rate, but banks make money when they sell those loans on the secondary market. The vast majority of loans that are being originated aren't going to be serviced by that mortgage company. They're going to be sold to investors, right? And so what they charge when they sell to investors on the secondary market is really the money that they're going to be making. And so it's kind of the margins that you are playing within, is kind of what dictates your pricing. And so when I made the move over to Fulcrum Home Loans, which is a mortgage broker here in the Treasure Valley, our margins are just very, very slim. We charge a set 200 basis points on every loan we originate. And so, in comparison, most retail banks are charging between 300 and 350 basis points per loan. And so, that's basically a point in and of itself that we're charging less than most of our competitors. And so, as a broker, we just have less overhead. We don't have an underwriting team that we're paying for, a marketing team that we're paying for, all these layers to the company that need to get paid every time we originate a loan. Those are being paid for by the wholesale lenders that we're sending business to. And so a big one that we use is United Wholesale Mortgage. Idaho Housing is another lender that we'll send business to. They're the ones that are paying for their underwriters, their funding department, their disclosure team, like all that stuff. We don't have to worry about making money for. And so really what it does is I see it as like an efficient way to do business, right? So you basically have less overhead, and so in return I can offer my clients a product that is significantly cheaper in rate or points. And so that's where when you take a loan estimate from us and compare it to a credit union or a retail bank, you're going to see significantly less fees just because of how we've structured things.
So two things on that. Just I want to go over and broad stroke or refine a little bit two definitions, like points and basis points. Can you just touch on both of those?
Yeah. So it's essentially like a discount point would be a percent of your loan amount. Okay. And so, you'll see, especially in a high rate environment, I would see loan estimates come across my desk and, they'd be advertising a certain rate that looked really competitive. But when you look in the lender fees section, you see, they're paying, an origination fee, which is one discount point to get to that rate.
1% of the entire loan.
Yeah, exactly. So they're paying, if it's a $400,000 loan, that's $4,000 that they're paying up front to get that rate.
And by they, you mean the borrower.
The borrower, correct. And so a lot of borrowers, and I'd be the same way if I didn't know any better. I go back to before I got into lending, you think you're, just looking at the cost of doing business. And for that lender, that may be the case. But where we're at, we don't have an origination fee. And so we have one underwriting fee that we charge with all of our lenders. And so we're basically able to give them a true par rate in terms of what we're making off the loan. And so when we get a quote, even if another lender looks like, they're at where we're at or maybe a little bit below, what we try to get them to see is an apples to apples comparison. In terms of what's the total cost in fees that you're paying to get to that rate. And you don't necessarily have to pay that through us. But if you did, hey, this is where you could buy your rate down to. And that tends to, allow people to just peel back the layers a little bit. And so that's, just part of that education you talk through, just trying to help people understand where their money's going. And if they want to buy the rate down, if it makes sense for them, do they think they're going to be in that loan for X amount of months to where they're going to break even on the interest that they'd be saving monthly, right? And so, and if not, then hey, it's probably not worth it to buy it down. Yeah. There may be a time in the future where you're going to be refinancing here pretty soon.
Right. Yeah. Or in this market, we get the seller to buy it down for them, which is an option, and then they're not out any money. So if they do refi, then they just got all the benefits without having to worry about the if they paid off that buy down.
Yep.
So that second thing that I wanted to get into is you mentioned not paying for underwriting. You still have access to underwriters though, right?
Yeah. So the wholesale channel, the wholesale lenders that we use, obviously they want to make our lives as easy as possible, right? Yeah. Like they want our business. And so what I've seen is just some pretty incredible technology that they're leveraging to have access to the people that we need to be in touch with, our underwriters, the disclosure team. We have account executives at every wholesale lender that we send loans to that are basically there to make sure that our lives are as easy as possible to get these loans done. And so it's been super efficient. I mean, the time that our loans are spending in underwriting are just, blowing my mind every time I send a loan in. We're talking same day approvals, 1 day approvals, like as long as we have a clean file and we do our work up front. These underwriters are doing their job. They're specializing in what they do, and then they're getting compensated for it by their employer, and we're doing our job up front and making sure that everyone's kind of firing on all cylinders. So.
Yeah, that can make a difference when closing on a home. You find the right property at the right price, and getting that Rockstar team together to close the loan quicker than anybody else will, and at the same time doing your due diligence. There was this quote, and it's from a book. I don't remember which one it's from, but it talked about Michael Jordan being one of the greatest basketball players of all time. That's great. That's fine and dandy, but he didn't have any rings. He didn't win any championships. It wasn't until that he built a team around him and got those players and the coach, and built that solid Rockstar team that he started winning championships. And that couldn't be any more truthful than what we have here today, because when you build that Rockstar team around you, there's no limit to what you can do.
Right. Yeah. It's if you want to go fast, go alone. If you want to go far, go together. It's
Love
like that whole idea.
Yeah. And it's not just closing early, it's actually getting to the closing table, which is so important, because I've seen firsthand lending fall through, and it's, just based on the lender. And it's humiliating for the client, and it's heart-wrenching, really, because they have whether it's investment that they have already done their due diligence on, they ran their numbers, and they're ready to start cash flowing on it, or they're excited about it because it's going to build their generational wealth, or it's a primary residence where it's somebody they've already pictured themselves in that home, and week of the whole deal falls through, they're not able to close because of a mistake that somebody else made. So there's really, I don't think there's any excuse for that. And having that Rockstar team, like, there's no amount of money I could save to put myself in that situation, and especially not see my clients in that situation. Moving forward, though, could you walk us through what the loan process looks like? Like, if somebody has never even had a conversation with a lender, they want to buy a home, where does the loan go, coming from walking in your door for the first time to getting that closing table? What's that process look like on your side?
Yeah, no, that is a really good question. I think for me, I enjoy having an initial phone call up front. I just like getting to know the people I'm working with, hearing their goals, hearing a little bit about their situation, just so I kind of have some notes to work off of when I see that file come through. And so, I'll ask them about their income situation. I'll ask them who all is going to be involved on the loan, what type of purchase this is going to be. And then, the application itself is pretty straightforward. 10 minutes it takes to fill out online. And then we have an online portal where they'll just upload the documents that we need. And I'm kind of a stickler when it comes to docs up front, just because, like, I want to work efficiently. I want to do a service to not only the real estate agent, but the borrower themselves, and be able to get them answers. And the only way I can do that is if I get my eyes on what I need to see. So, we'll really stress getting our docs in up front, upload it in the portal, and then we'll start building out the file. And if we get docs right away, we can get same day pre-approvals back out to them, showing them, whether they want to see what their max purchase price is, what they want to see a certain listing price would get them in a monthly payment. We can run a number of different scenarios for them, but then basically giving them that pre-approval letter is kind of like a coupon to go shop with. The coupon essentially just telling the sellers that, I've been vetted, like I've been I've gone through the process to show that I actually can buy this house, and I want that pre-approval to mean something, right? And so that's another piece of advice I got from an agent early on is like, hey, when you give me a pre-approval letter, like, I want that to mean something. I want to know for a fact that, like, these people are good. And so, I take a lot of pride in that. And so doing that work up front just gives them the freedom to go shop. And so, as we've worked with before, we'll get that pre-approval out, and then that's where the agent and the buyers can go shop kind of with a peace of mind and knowing, like, hey, this is something that's in my wheelhouse. And now they can actually, visualize themselves in this place. And so when they want to put in an offer, essentially I'll just run some property tax numbers, make sure we're dialed in on all the specifics of that purchase, and we'll get an updated pre-approval with that address out so that you can put it in with the offer. And then from there, it's opening up escrow and making sure now that we're updating our documents. If I got bank statements early on that said, we had enough money to close, then, I'm gonna want to update those documents if need be to make sure you still got enough money to close, especially if you were right on the verge. And so in that process, once they get under contract, I'll talk to them about locking their rate, kind of depending on where the rate environment is at. You know, it might be the situation as was for a few months prior to this, where we're just locking right away. You know, we don't know where rates are going to go. So if you're under contract, like let's lock. Or it might be the case where, hey, we have some reason to believe that rates might be improving a little bit, so we might wait it out, see where some, you know, economic reports come out and what effect that might have on rates, and then we can lock, you know, further down the road. So it really comes down to the buyer. It's got to be their decision, but that's another conversation where you kind of, you know, you're able to counsel and walk people through, you know, making that decision. So, but yeah, that's essentially like getting into contract from that first phone call. It's really not as involved as people might think. It can happen pretty quick if the clients are motivated.
Yeah, and it's nice to have someone like you to ask questions along the way.
Absolutely. So let's talk about rates, because that's probably what is on everyone's mind. Like, what do you, and this is going to be outdated. So, you know, today is the 7th of December, 2022, depending on when you're listening to it. So what do you see rates doing?
Yeah, I think, you know, I've gotten really good at telling people, you know, that I don't have a crystal ball. You hear that all the time. Yeah.
I thought we told you to bring it today.
Yeah.
You didn't bring it?
Man?
Yeah.
Mine's in
If
the
you
shop
find
too.
one, let me know, because I could be a rich man. But, you know, I think what we've seen, especially in recent months, is just this battle with inflation. And I think inflation's been the main driver for where rates have gone. And so if you look a few weeks ago when we got that really nice improvement, it was coming on the heels of some inflation numbers that came out better than expected. And so I think investors were encouraged that inflation was a little bit more under control. The only prediction that I'll give, if you even want to call it a prediction, is next week when those inflation numbers come out for the month of November. You know, that could have a big bearing on where rates go. You know, if we see another month where inflation numbers look good, or at least better than, you know, than expected, or better than where they were, I could see another improvement coming. That's not, you know, predicting that will happen, but you know, at this point with high rates, people want rates to improve, right? But we just need the economic data to give reason to why they should. So
yeah, I think it's crazy because 6 months ago everyone was saying, well, I'm not going to buy right now because prices are too high. I'm going to wait for them to come down.
Yeah.
Well, here they are. They've come down because they've raised the rates, and now they're saying, well, the rates are high. I'm going to wait for the rates to come down because now the housing's down. Well, with our low demand that we still have,
right.
you know, as soon as the rates start to come down, if they want them to come down where you know, where they're waiting for them to come down, the prices are going to shoot back up again, and now they're going to be in another high demand market.
Yeah, and I'll
having
just
to compete with everybody.
No, for sure. And I'll speak to this. Like, if you talk to people in our office, you know, me personally, some other producers in our office, we're getting a lot of applications still. There's still people that want to buy.
Yeah.
And if we look at the rate of apps that we've been getting, you know, there's from what I can tell, a lot of people on the sideline right now that are pre-approved that are just trying to do exactly what you said, just wait and time it and be, you know, in that perfect position. But the reality is, like, they're not the only ones. And so once that does happen, the competition that's going to come with it and everything that can entail is going to be a whole different ballgame. And so, you know, I think that's something to keep in mind. You never want to push or you know, force anybody into making a decision, but it is important to take a step back, kind of have a big picture view and see, man, you know, everyone was complaining about how high prices were for a long time, and now we're finally seeing some relief. Is there some opportunity here?
Yeah, one of my favorite sayings, which I ripped off from Bigger Pockets, is it's not about timing the market, it's about time in the market.
Absolutely.
And a lot of people see, or they have this like purchase price or this interest rate mentality, but what they don't see is they've now spent months waiting, where that's months that not only they have a known asset if they did their due diligence and they actually got into contract, but that's months that they lost in getting their principal paid down by their tenant. And then what if prices do skyrocket tomorrow? Well, now they have all that appreciation that they'll be able to buy down into a lower interest rate, maybe pull their investment back out, reinvest in something else, and they're still cash flowing because they're at a lower interest rate on an asset that has been giving them money in their pocket through depreciation and through principal pay down during that entire time that maybe was a little bit more painful than they would have liked.
Right.
Yeah. And the education that they learned by doing so, you know, they don't get that time back. There's no reason to not start achieving your goals today. So speaking of goals, as we close out this segment, one question we like to ask our guests while we're here is, what's one thing, in your opinion, that you would tell our listeners that they could start doing today to start achieving their goals?
So, a principle that came to mind when you asked that question is one that we used with our players back when I coached. And excuse me, what we would tell them is your mindset should always be do the next right thing. And so, we'd kind of flesh that out for them. Like in the game of basketball, if you miss a shot, hey, don't sulk about it. Don't feel bad for yourself. Do the next right thing, right? There's transitions happening. You got to be ready to go. You got to be ready to move and to pivot, right? If you turn the ball over or if you foul somebody, do the next right thing, right? Always be moving forward and seeing how can you better yourself, better your situation. We'd also be like, hey, if you skipped class, do the next right thing. Come tell me that you skipped class, that we can get you back on track, academically. But I think that rule applies to life. I think it applies to investing. I think it applies to home ownership, relationships. You can flesh that out a long way in terms of what is the next right thing that I can do? Don't let mistakes compound, right? Maybe, I haven't had time in the market, and I do want to head down this path. Well, what's the next right thing? Maybe it's getting a hold of a lender and getting, in my stuff in order so that I can get pre-approved or get in a position to buy. There's always an opportunity to do the next right thing. So it just takes a little bit of a mindset shift to think well, first, what is the next right thing? But that's also how you achieve respond to success too, right? Just because you have one little win, you don't just sit back and think man, I hit it right. I'm pretty good. No, it's well, hey, do you want to build on that? We'll do the next right thing. Always be moving forward, taking steps in the right direction, whether you're failing or whether you've failed or whether you've succeeded. So.
Yeah. One of my biggest things that I always say is fail early, fail often, fail forward.
Yeah.
And you just connected the dots for me on that because of that fail forward part. It's okay to fail. Yes. It's okay to fail often. We need to. That's how we learn. But what's most important is that we fail forward and we're consistent at it.
Right.
And we move forward. We take those mistakes. We do the next right thing.
Yeah.
And that's what's so important. That's what builds consistency and that's what builds wealth over time. Okay. So do you have anything else to say?
Yeah, well, I feel like I have to put in my tidbit because we're all being motivational here. So don't regret, reflect if you have to, pivot, and then execute appropriately. Is my little 2 cents.
I love it. I love it.
But from there, let's close out and just, dude, you've really made approaching a lender feel human, which is awesome. But how can people reach out to you if they do want to start that conversation?
Yeah, so on Instagram, my handle is @LifeLens. My name looks like Leaf, so there may be easy to misspell that.
Leif.
Yeah,
right?
there you go. But yeah, my website www.lifecarlberg.com is my online application. But I would just reach out either over email or just send me a text. I don't know how we can make my phone number available, but I want to be accessible to people. So my email is life, Leif, @fulcrumloans.com. But yeah, I'm more than happy to answer any questions or just collaborate with anyone that's just thinking about taking steps forward with some financing. So
yeah, that's huge. We really appreciate having you. That was awesome.
Sweet.
Yeah.
I appreciate you guys.
Yeah. Hey everyone, we're the Turnkey Brothers, and thanks for tuning in with us today.
Don't forget to smash our algorithm with those likes, subscribes, and sharing it with someone you think would benefit from this episode.
Also, don't forget to follow us on your favorite social media platforms @Turnkey Brothers.